Hello, everyone. I hope everyone is finding this to be a great video thread to help anyone who's looking to get some more answers in investing. Right now. I'm doing my experiment with the Robinhood app. Also, trying to see how this app will really benefit someone, and also see how having an average salary of $45,000 and constantly inputting into is kind of similar to a way a 401k fashion is, with 20, 30, 40 bucks every week, and see if I can build something out of nothing and see how fast I can get there. So right now, my portfolio is up 7% since I started in March. I increased my my weekly deposit to $30. I initiate the deposit on Wednesday, so that way the funds are available on Friday. Friday to me is the best day to buy, especially if you can wait till the end of the day, right around 3:30, because everyone else who's decided I don't want to be in the market over the weekend and avoid losses on futures, they'll sell off, and you get a chance to buy it at a nice little premium. Not much, but 10 cents here, 20 cents here makes a hell of a difference for someone who only has a portfolio value of $400. So right now it is at $424 and some change. I did take a stance and buy a few shares of Fit, which seem to be working well for me. So hopefully that the Fitbit stays on course and keeps evolving, and then we could sell off and cash out the equity before the stock then eventually says, people say, oh well, this stock's overvalued. And so right now my strongest player is CFG, Citizens Financial Group. Great stock to buy into, I think, especially since it's kind of bouncing out. It's not going up, it's not going down too fast. It goes down like 12 cents, goes up like 30 cents, goes down and up and down. So it seems to be helping to balance out the portfolio and minimize the amount of risk. Not risk, I should say, but minimize the amount of loss that you're getting every day. So instead of losing like $5 here because you invested in a risky stock, I got a heavy amount of shares in it. So if I lose 2-3% there, I gain it back someplace else, and I still end up a little bit positive. Like yesterday, if it wasn't for Citizens Bank and Bank of America, I probably would have been about a 12% loss, but I ended up being about a 0.03% gain. It ended up being 51 cents positive. So, and that's another thing that you got to stay focused on with having such a small account. It seems is you got to stay focused on just making any gain you can any day. So even though 51 cents doesn't seem like much, you can't even buy a newspaper nowadays with that. But 51 cents is 51 cents that you now have to throw into another trade that you didn't before. Now, I wouldn't go around picking penny stocks, but I would stay focused on trying to get incremental gains out of steady stocks. So right now in my portfolio, I have Zynga, which is kind of a high risk because you don't know what's going on there. Most likely they're going to fail, but we don't know. But having 6 shares at $18, I can afford to lose $18 and still be positive on my portfolio. I have CFG, which is I'd say about 33% of the portfolio. I have Bank of America, which is about 15%. I have Ford, and I have Fit. That's a kind of a little weird mix-up. I got a kind of stagnant automaker. I got a stagnant bank. I got a growing regional bank. I got a pretty decent growing tech company that just recently launched, and I have a software company that doesn't know where it's going. So with that, I can say Zynga's been pretty flat. So I'm just gonna leave it as is. I'm not gonna invest anymore in it, but I'm gonna wait to see where it goes. If it drops to 280, it's time to sell. If it goes up, but it seems to be staying at $3, and I'm still at a positive for that stock. No dividends on that stock, and I'm kind of big on dividends, especially when you only have such a small portfolio. Dividends seems to be the best way to hold a stock and make a little bit of return on it while the stock is incrementally going up. So with that said, my 3 dividend stocks are Ford, Bank of America, and CFG. And even though the amounts that you get from them are maybe $1 every quarter, but you got to think of it in this way: it's an extra dollar that I didn't have before. Whatever the amount is I didn't have it before, so now I have it to use. So you're quickly going to quickly try and take your money and put it someplace else. So now my strategy is, now that I have over $400, I can move money quicker, and adjust my portfolio better. So because before, when you're at $200, you only have one share in a company, so there's not a lot of money that you're liquidating and moving and putting into another stock that can give you a better return. Now, the average stock holding is over $50. So if I sell all the shares and liquidate it, now I have more money to play with, so I can buy more shares. Now my goal is now to moving forward is, now that I increased my average deposit to $30 a week, now it's just buy one share, leave a little bit of cash. Buy one share, leave a little bit of cash. Start trying to build up a little bit of a cash reserve. Because what your cash reserve is going to do for you is, when you see something that you absolutely have to buy at that moment, you'll have the cash to do it. And without commissions, you can just make the trade like that. That's the real great benefit of this Robinhood app, is you can make a trade instantaneously, and you can get it at the price you see it at, or within a few points, within a few cents. But now at this point, with having $400 and growing, it is becoming important that I have a cash reserve. But it's also still important that I keep buying shares. Even if I'm buying them higher than when I bought them 3 weeks ago, I still gotta buy a share. I gotta buy something. I gotta put the money to work somewhere. But I also gotta leave some money idle. So now I gotta build my cash reserves. So now the idea is, by the time end of August, September 1st, is my strategy should be, I should have 80% invested, 20% liquid cash. Now what this is going to do for me is, when I see something, or I want to buy a quick stock before I know a launch is going to happen, like you want to buy Samsung before the Galaxy phone comes out, or you want to buy Apple before the next Apple phone comes out, or anything big that these companies do, you will have the ability to do so. And that's very crucial with continuing your growth of your portfolio value. But as you can see, being at a $400 mark, and you're only putting in $30, maybe at most $50, it gets very hard to build up the equity very fast. So we've already determined the first fact, that is, if this trend continues, I'm not going to have a significant amount of wealth. Like some old school investors might have said, like, if you just keep putting $20, like certain amount of money every month, you'll be very successful and will have a significant amount of money. That's not true. If I keep this pace up and just keep putting in $30 and keep the trades I have, I will probably finally reach $1 million about 100 years from now. So I got to find a way to use my money better and to spread my money faster. I haven't come up with a quick solution to that not only would I increase my value of my portfolio by another 3 or 4%, but I would also not lose money. So that strategy has not yet to be found, because with $400, I can only put so much money so many places and hope for the best. So with that said, I'm going to keep doing these videos. I'm going to keep trying to stay updated on how I'm going to do it. Please like and subscribe. I do have a Facebook page for you guys, so it's called Simply Investing Community, or Simply Investment Community on Facebook. I mean, it comes right up when I type in Simply Investments, so it's some place that I just want to have where people can throw questions on, or comment below and throw questions on, because I'm trying to figure out how to do this. So, because if we can figure out how to make a decent amount of money off a very little bit amount of money and share it with everybody, at least everybody will have now an equal take in the market. But as far as I can see, my own portfolio, which is vastly, it has far more amounts of capital in it, is increasing faster than this one is. And I want to see if I can increase this one as fast as my other one, because my other one's up about 12% every month. So I would like to see how I can get this $400 one up 12%. Now the problem is I can't buy the same trades and do the same things. I can't do options, puts and hold. I can't do any of that yet as of right now. But even still, I don't even have the cash and capital to do it in the account. It's only $400. So hopefully by August I'll be in a good spot where I can move and liquidate very fast. That's my goal. So until next week or until my next video, see you guys later. Best of luck with your investments, and I hope that your strategy wins, and I hope that I have shared some light, and hope that you guys can give me some good feedback and see if I can adjust and make this thing happen. Thanks, and have a good Friday.